It's a little short of 21%, just to be precise. But, we do think that lower interest rates are definitely a good catalyst for valuations. And there will be an earnings pickup in the next 2 or 3 years ahead of the traditional 14-15% long-term earnings growth that we're used to. We should see a higher trajectory in the next few years. So that will support. Now, to some extent, markets already obviously factor or look forward. So there has been some element of that already in the market. But we still think, equities are still one of the better asset classes to choose from amongst the options available to the investors in India now. And through a 3-4 year cycle, I think, there are enough bottom-up opportunities that should continue to grow and do well. So, it's our sense is therefore a 3-year investment horizon, ideally 5, because we've seen through any 5-year cycle, the chances of losing money are very low. But I think over a 3-year cycle also it shouldn't be too bad.
Right. Let's talk about the composition of your own funds. You got a good mix, but do you think that the consumption-oriented themes, looking at how India is, the economy is shaping up, would outperform some of the other areas of the market?
No, I think it's a total mix, frankly. We are seeing a lot of cyclical companies which can do very well in the next 3 years as the economy picks up. I think cyclical areas have been the most stressed in the last 4-5 years, and that's where there's a lot of interesting opportunities. The consumption theme, of course, is a very long-term structural theme. The challenge there is valuations that you're paying for a lot of consumption-oriented companies, but there's some great companies which will continue to grow. So you have to have a fairly long-term horizon as far as consumption is concerned. But what's really exciting us about the markets is that it's a mix. It's not, a one-dimensional market like it's been necessarily in the last 5 years, where only one category of stocks does well.
Okay.
I think now it's spreading out to a wider range. And wherever there is growth, I think the market's willing to pay a price for it.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.